All right, so let's go ahead and get into the material so that it can at least be recorded for those of you that are either A, still in the midst of lead generation, or B, taking a nap. So today is all about financial basics. So what does that look like for you in where we are, right? So the financial basics of the work that we're doing in our business, right? So it's from that perspective that we really want to dig in. And understanding that successful agents manage money every day or on a weekly basis so that they can be building their wealth, right? So putting this into perspective, habits for a financially sound business is that you've set a profit goal that funds your perfect life and to pursue the activities to achieve it. You're going to estimate, save for, and pay your taxes on time. You're going to use the proven models and systems of the MREA chart of accounts. So that's out of your red book, The Millionaire Real Estate Agent. You're going to be fiscally savvy by reviewing your financials monthly, especially in times like COVID. I prefer to review my financials weekly and would encourage you to do the same. Habits can go for a long time without being checked, and 4 weeks is a long time of having a habit. So that's why I like to reduce it down to every 7 days. Paying yourself a salary and understanding that that is based off of the goals that you've set for yourself. It also has some tax advantages. I'm not a financial advisor, so do not take my opinion as law. Please go ahead and consult with a financial advisor. But the idea of paying yourself a salary is that you can be living on, budgeting on a fixed income. So by picking that number that works for you, let's say that it's $60,000 a year, then any profit that's done outside of that can be reinvested into the business, could be reinvested in investments, long-term retirement, or it itself can be profit that works for you in addition to what you're making to fund your life. And so this is what's really important for us, because if I can live on $60,000 a year, but yet make $200,000 a year, what's the world that I can do? What are some of the different ways that I can invest or create horizontal income for myself and my family because I've done this? It's also from the perspective that if you have it set up as an independent contractor, you actually are taxed twice, right? As being self-employed, as well as your overall income tax that's going to be coming in. So instead, you actually, by creating a salary, could be taxed twice on the salary, but then only be taxed once on the difference between. And again, you'll have to consult with a CPA and a financial advisor. But these are really some of the key indicators that can be there, which can also help to reduce your tax bracket. Now, again, I'm not telling you not to pay any taxes that you owe. I'm saying that you are dealing with a system. And so it's better to know the rules of that system and how that can be to your benefit, right? I'm not asking you to avoid taxes. I'm just asking you to not pay unnecessary taxes if you don't need to. And then prepare now for a financially secure future and what that looks like. So money is good for the good that it can do. And so it's from this perspective that people say, oh, well, money is evil. Money is not evil. The love of money is evil, right? And yet money can be good for the good that it can do. What are some of the things that you can do, the lives that you can change, rewriting your family tree, giving to organizations that you believe in? And yet none of that happens if all you do is bring 100% of it in and spend 100% of it leaving out, right? So understanding what this looks like, some people, right? And this is the idea of 2 ways that Jessica could run her money. So she sells a house for $9,000. From the $9,000, her split is $5,760. She puts $760 into her personal bank account. And then she then puts that immediately into her wallet at $760. That's a typo there. She does no savings for her business. She does not reinvest in her business, nor does she do any savings for her taxes. And that can become a big no-no. And you'd like, oh no, I would never do that. You have to understand that this is very common for people who are used to being employees first. So instead, here's a difference of what this looks like. So Jessica sells a house for $9,000, right? A $300,000 house, she gets 3% commission, that's $9,000. Her split is $5,760. She puts 1,726 of that into her business bank account so that she's reinvesting. She's then taking the remainder, that $4,032, putting that into her personal bank accounts, of which she's going to put away the 1,613 and then put $2,400 into her personal account, right? And so understanding what this is we basically, depending on the price that you make, right, the income that you make, it can pretty much account for about 20.6, so about 21% should be your tax rate, or the amount that you should be saving in the state of Florida, because we do not have state income tax, right? So just letting you know, but you will have self-employment tax and you will have federal income tax. So I plan for roughly around 21% for taxes. But you can see here that the idea is that when you receive a check, that entire check is not yours to spend. So we want to be really intentional about what that looks like. So as you can see, this is what this, as we just did that sample for you. Understanding the Millionaire Real Estate Agent and the MREA model. So the Millionaire Real Estate Agent is the premier book. You should have a copy of it. If you do not have a copy of it, please get with your Market Center leadership. They have copies of it in the office that you can absolutely get one. They're $10 when you buy it from the Market Center. That is the wholesale cost. I think it's like $24 or $19.99 if you go to like Barnes & Noble. So definitely buy it from the Market Center, save a little bit of money. And yet the idea here is that generally speaking, and I know that I said before that there's about a 50% net. Well, it's about 50% for when you're an individual agent, because quite frankly, you just don't have the same amount of expenses as someone who starts to leverage. However, once you start leveraging with transaction coordinators, maybe an administrator, as well as some other expenses through marketing and other things, you'll find that generally speaking, we've got about a 30% cost of sales. So cost of sales is going to be your cap to the Market Center, right? The amount that you pay the Market Center plus royalty. And as you get larger, your cost of sales might also include, say, a buyer's agent, right? Or someone on your team that's receiving a portion of the commission. So cost of sales about 30%. Your operating expenses should be about 30%. 10 of that's going to go towards your lead generation, so your marketing and your prospecting. And then everything else falls into that 20%, which leaves you with a net income profit of about $40,000 to go into your personal bank account to then be divvied up between taxes and your actual income. Now, for a lot of people, they go, well, I didn't get into real estate to only net 40%. You have to remember that you started a business. So in the chat box, I love to have this conversation with people about what are some industries that you think have great profit margins. So for one, what do you think the profit margin of a grocery store is? And some of you have taken this class with me, so you're already going to know the answer. But what do you think the profit margin percentage of grocery stores is? Go ahead and put that in the chat box. So Kelly said 28%, okay? Leslie said 30%. Bo said 2%. Linda Anderson said 30%. Bo is the closest. Grocery stores have an average profit of anywhere between 1 and 3%. So just keep that in mind, that Publix is that big and that profitable by being profitable by 1 to 3%. Absolutely. What about restaurants? What do you think that the average profit margin is for a restaurant? Kelly likes that 28%. She's playing the Price is Right. Leslie's like, well, I know this trick, so 5%, okay? Bo is saying 5 to 10%. Of course, it all depends on a myriad of things, right? Whether or not you have alcohol, whether or not you are doing organic food, if you're doing zero preparedness, full preparedness, walk-in kitchen, no walk-in kitchen, the types of goods that you're actually producing. But it can be anywhere between 5 and about 25%, depending on how you build your profit margins, right? So, I mean, you have to imagine that, like, for instance, a chicken parm, right? This is why I refuse to buy pasta whenever I go to a restaurant, because my father's owned restaurants and I spend way too much time. I know that a chicken parm right, dish that normally if you go to a nice Italian restaurant is going to be anywhere between $18 and $25 actually cost the house somewhere between about 87 cents to just shy of $2, right? So the meal itself is costing anywhere between, $1 to $2 for the house. Now, this doesn't include the price per plate that's necessary to keep the lights on and to pay rent and to pay the staff. And so it's really understanding that there are a lot of industries like this that are having this conversation, that are looking for higher margins. This is why attorneys get into real estate. This is why people who used to own restaurants get into real estate, because the profit margin with such a low entry, right, a level of entry into the industry of, say, the $2,000 of getting your license, getting fingerprinted, joining Pro, paying the national, local, and state Realtor Association, your MLS dues. It costs about $2,000 to get started, and yet you have access into about a 40% profit margin in this industry, right? And for those of you that chop at the cost of sales and don't invest any operating expenses into your business, you don't reinvest into your business, then your profit margin can be even higher. I just don't know how large you're going to scale, because you're basically starving your business if you do not reinvest in it, right? So the idea here is that for a $10,000 check, your cost of sales is probably going to be about $3,000. Your operating expenses, you should be reallocating about $3,000 into your business account, which means that you're left with about $4,000, right? So absolutely understand what this looks like. So generally, what people have done is they've done, the flow of money has always been income minus expenses equal profit. And that's horrible, right? I'm going to have whatever comes in, I'm going to pay all the bills for whatever goes out. I might not challenge those things or hold them to a certain level. And then whatever's left over, that's profit. Well, that doesn't sound like a business model that I want to do. I would prefer to know what's my profit, right? And then I'm going to actually find out how can I limit my expenses. So if I want a 40% profit margin, then I need my expenses to be about 60%, right? Between cost of sale, my COGS, my cost of goods and services, as well as my overall business expenses. And then that tells me how many homes I need to sell in order to make the profit that I want to make. Or the opposite is if you can be a little bit more diligent, and it's one of those things that is for all of the income that comes in, I immediately allocate for profit, I immediately allocate for expenses, I immediately allocate for taxes, and then whatever's left over, that's what I have to invest in my business, with being really intentional about that. So understanding that income, so income can come from listings, right? They can come from working with buyers. They can come from working referrals, so sending a referral to an agent or having an inbound referral, as well as some leasing income. We really don't do leases here. We definitely don't do property management. However, there are some opportunities where you could lease or list leasing properties from that perspective. Your costs of sales, right, from an expense perspective, is the commission paid to the office, right? The market center commission, the fees that are owed to the broker because you are running your business under their business, right? You don't need the phones, you don't need the front desk reception, you don't need the brick and mortar. That is part of what you're paying for by being a part of the market center. You pay the royalty fee to Keller Williams International because we're using Keller Williams International's training and coaching and models and their name recognition to help build our business and to have instant validity because it is a franchise, right? Then our commissions or splits that are paid to any employees, independent contractors like transaction coordinators, marketing companies, whomever else you use to help you through transactions. And then if you have any referral fees, right? If you receive a referral from an agent, like we did an agent in California, that person is to be paid a referral fee. So that comes out of the gross commission income, right? Bo, I can absolutely talk to you about that offline. So digging into some of the costs of sales, right? So understanding what this looks like. And we've already done this formula. We've kind of shared what this is. So about the 30% So in our market center, right, it's from that perspective that your cost of sale equals 18,000 of company dollar, and then about 3,000, not about 3,000 for your royalty, which is a total of 21,000. Now, to be curious about what that looks like on each transaction, you would say it's about 30% to the gross commission income until you cap, and about 6% of gross commission income for royalty until you cap. And now capping, for any of you that this kind of breezed over, this is the limit. This is the max that Keller Williams is going to take out of your business, which is why so many people work towards capping and say 2 months, 4 months, 6 months, so that they can enjoy the second half of the year or 3/4 of the year at 100% commission. Now, here's another thing that people don't realize is that the reason why we do the 30% for company dollar and the 6% for royalty, or the reason why we teach you to be basically on a 50-50 split, is so that you can you can do about 20% for your taxes, right? So if I can live on 50% of my income, I can put 20% away for taxes, and then I can either save or invest the 30%. So since I'm learning how to live on 50% of my income, when I cap, now instead of that money going to the market center, I'm already trained to basically take 50% of my income and put that into my profit. I'm going to take the remaining 50%, put 20% towards my taxes, and then 30% towards buying investment property or my stock portfolio or whatever that looks like. Kelly asked the question, at what point in the year does the cap reset? So your year, everyone's year is different. So whenever you join the market center, so let's say that you joined in the middle of February, whatever the following month would be, that first following month. So if you joined February 14th, then your anniversary month will always begin on March 1st, right? So my anniversary is in October. So it starts October 1st of every year, it restarts the clock for me. So everyone is different. It's based off of your anniversary year when you joined the office, right? So plan for your future. I really want to take this opportunity to do that. And again, I apologize that we did this backwards, but I'm really glad that you kind of did all the legwork of your business on the front end so that we can really be having this conversation about future business and your future plan to take you into the weekend, right? And to be on a high note. So I want you to plan for your future. I want you to think about, what does that look like for you? Where do you want to be? And so one of the great things that we do about this is, let's say that I'm in my office right now. Let's say in 5 years from now, you come back to my office and you sit down in the chair, and I want you to tell me what's going on in your world that you are so proud of. What's happening in your business? What does your business look like 5 years from now? What does your income look like 5 years from now? What does your family look like, or the experiences that you've been able to accomplish in the last 5 years? I want you to take the next 5 minutes to be thinking about that, right? What are some of the things that you've accomplished? Or you can do it the opposite, which is you can say, there's a certain financial level that I want to get to. There's a certain number of passive income, or there's a certain level of net worth that I want to achieve, which is going to allow me my financial independence. It's going to allow me to retire. It's going to allow me to provide a certain lifestyle for my family. Whichever way you want to go, take the next 5 minutes to be focused on planning your future. And then we're going to come back together and put that in the chat box. All right, I see that we're getting some answers in here. Bo said that he, let's see, where'd he go? Bo said that he's capping in his first quarter. He is bought and built out their residential rental unit and bought and built out a commercial unit. Kelly said in 5 years, she will be debt free. She'll be making over $100,000 consistently and will have flipped a house and own an investment property. She will have sponsored a few winter family getaways for her parents, siblings, nieces, and nephews, and she has established her name and her business while driving a Range Rover. Bo also added that his goal is to get his broker's license, to be able to be a property manager, and to have become an industry expert with an excellent referral network. Awesome. Linda said, be debt-free, including the house, be able to take family vacations paid in cash, help kids and family in general to be financially sound to keep us from building up any debt. Feel accomplished with my real estate business and growth of client base. And Leslie said 5, 10 multi-unit investment properties providing cash flow, making enough off cash flow to not have to exchange my time for money, reinvesting into real estate using the B quad R method. Okay. And so understanding one of the things that's here is that now that you have this information, or now that you have this goal, you also need to be from the mindset of what is going to be the cost associated with these, right? Or what are the activities that I need to do? So in order for Kelly to have her Range Rover, how much does she need to put away each month, or how many transactions does she need to do each month to ensure that she's putting away for family vacations, that she's paying off debt, that she has a Range Rover, that Bo has built his residential rental property and he has built his commercial unit, that Leslie has her 5, 10 unit commercial spaces, right? So we need to get really specific. What is the cost associated? So Kelly, if you've never done it over this weekend, I want you to go on the Range Rover website, and I want you to actually build your ideal Range Rover. Now I know in 5 years there's going to be a new model and it's going to be even more expensive, but I want you to go through this process and actually build the Range Rover the way that you want it. The color of the seats, the color of the car, all of those things, all the upgrades. And then right before checking out, you're going to see what the total cost is. And I want you to share that with us on Monday of what that total cost is. For Bo, it's the same thing. I want to know how much it's going to cost you to build your residential unit and your commercial unit. So is it the 500 to 750 for both or for one? Let me know about that. Okay, so that'll be for both. Awesome. Leslie, it's the same thing. What is your budget for the 5 units? And then how much are you going to put down? So Bo, are you going to be financing this? So leveraging your money? Are you going to need to pay the $500,000 to $750,000 in cash, or is this something that you're going to leverage out? Again, the point being is to figure out, let's say that he wants to put 20% down, so he wants to leverage. Okay, so what he'll need is he'll need anywhere between $100,000, right, to $150,000 cash to be able to put down for both of these properties. Well, if that's the case, then by when do you want to do that, Bo? Do you want to start construction in 3 years, in 5 years, in 1 year? So let's say that he wants to do it in 3 years, right? So in 3 years and 36 months. So Bo, tell me, what is 150,000 divisible by 3 years? Or 36 months, right? So 12 goes into 50, how many times? Close. So to his point, it would be $4,000 a month he needs to be able to save, right? And so one of the things that I'd like for you to do, if this is what this looks like, is to go to your bank and open up a bank account, open up a checking account, whatever. Your sales guy is going to be super happy. You open a new one, he gets a bonus. But the idea here is that you open up a new account and you name it, right? So Kelly, I want you to open a bank account. I don't care if it has $0 in it. I mean, I do if there's like a whole minimum balance thing. But If there isn't a minimum balance, or you just want to put the minimum balance in there, then the idea is it's literally going to be a bank account when you go into your online banking, and it's going to say Range Rover every time that you look at your money, and every time you look at that account. If that account has $0 in it, then you're going to know exactly where you're at. Oh, it's the same thing, right? So if it's residential portfolio, you can say REZ portfolio, whatever you want to do. And so set up another account and just name it, right? I mean, quite frankly, it can be a personal account, it could be a business account. You can transition it into being a business account in the future. I don't particularly care. The idea is that I just want you to be reminded of where you are, right? When you're doing things like this, right? When you don't get a Range Rover immediately through leverage, or you're not doing things, sometimes the lack of instant gratification, right? To be prolonging the track of what we're doing, whether it's in 3 years or 5 years, the challenge that we most often have is that we're so used to instant gratification that we sometimes lose sight of the long game. So that's why by tracking your net worth on a weekly basis, or in this case, by just putting a little bit away every single time and you're watching that build, it's going to be able to give you some motivation to see that account continue to build steam, and that you're working towards something that's more so than just working, right? This really works for me. It helps when I can constantly go back and check, like for instance, my investment portfolio. I like to every 15 days because I automatically preset. So I automatically preset on my salary. I immediately reinvest 50% of my salary until it maxes out at the 18,000, which is the allowable for 401k, right? So by resetting and just going and letting that happen automatically, then I can go in and I can watch that build every single year, and I can see what's happening. And so every 15 days when I have a direct deposit, then that's wonderful. Now, when I have my sales commission, then that's when I can reinvest and I can go through and do my profit first, right? So I'm going to take in that gross commission income. I'm going to reallocate for the money that's there. Yes, Bo, and I use Vanguard. So Vanguard is like my bread and butter. They are a mutual fund, and they have, 0 fees that are associated, or it's like 0.0025. And so, yeah, I'm young enough and I'm risky enough that I invest in a VTSAX, right? The total stock market exchange. Leslie, so how do you pay yourself a salary? By establishing a company, right? And again, you're going to want to partner with an LLC. You're going to want to partner with, or rather a CPA or a financial planner to establish either an LLC, an S Corp, a C Corp, whatever that looks like. And then you can have that business will generate an EIN, right? It's an employment or an employee identification number. You can then take that EIN, just like your social security number, to establish a personal bank account. You can take that EIN, go to a bank, and then start a business account. And so it can be really easy, especially if you ever get audited, to just go ahead and run all of your expenses from your business from that business account. That's also where you can pay yourself out a salary. Again, I know that I'm kind of giving you little blips of this. We can, of course, talk about this offline at a much deeper level. But quite frankly, I'm not a financial advisor. I can only tell you what I do and what I read. And I do read a lot about finances, but I'm not licensed and I don't want to get sued. So telling you what I do is about the extent of what you're going to get from me, right? But it's about planning for your future, right? Planning for your future has to be, that's why I hate dream boards, right? You hear me talk about goal boards or vision boards. I hate dream boards, because dream boards, which is the same thing, it's just a mindset. A dream board to me is, here are all of the nice places I'd like to go, or the things that I'd like to have if I win the lottery, right? Because I'm not willing to do any of the activities today. I'm not willing to prolong the gratification of tomorrow for things that I can have today. And we talk about freedom chips, and we talk about some of the stuff in the Reedy and Red show. But it's definitely from that perspective that is, you have to change your mindset, because I've shared this, right? I did everything wrong, right? I had maxed out credit cards. I had cars that got to the place of almost being repossessed. I have been in places where things went to collections when I was really young, and I went all the way to the point of having thousands of dollars of college debt. So I've done all the stupid stuff because no one ever taught me about this. And realizing that I thought that if my income just increased, then all of my problems would go away. And instead, my habits were the real problem. My debt was the consequence of my habits. So it had to be a complete change in your habits. It has to be a complete change in your mindset. And those are the things where, for me, having these little triggers like that bank account that I see, when it says savings, that doesn't really motivate me. But when I see that that says retirement, which I like to refer to as FU money, right? Because it's going to be a place where I'm going to be able to say, sorry, I don't want to do that thing, or I don't want to go and do that thing, or I don't want to have to do anything. So if you think that that's the only way that it's going to work for me, well then, FU money, right? And so I know that's not in culture, so hopefully this doesn't go on YouTube. But at the same time, you understand my mentality. So it's from that place that you can get to, but it has to be about building new habits. And for me, habits have to be seen or monitored on a daily or weekly basis, right? Okay, so we talked about this, right? So gross profit goal, what that looks like for gross commission income, for profit, home sales. This is kind of just letting you know how to break it down even further. But it is going to help you for your net profit goal. When you start to put these things together, like how much you want to put away for your Range Rover, how much you want to put away for that investment property, how much you need to put away each month to be debt-free, you're then going to realize on a yearly basis, you need to net a certain amount of money. And so you can actually take that certain amount of money and then go through this equation, which is in your participant guide, to be able to look at that and get any of the guidance that you need, right? Okay, why isn't it going? So you can see kind of the idea. This is telling you what this would look like if you walked through this process. And that's the total breakdown. If you wanted to net $100,000, you would actually need to have a gross profit goal of $166,000, which means that you would have to have a gross commission income of $416,000 because of, in this case, they're talking about their taxes, which ours are slightly less because we do not have state income tax, right? Which would mean that you'd have to do about 56 transactions with a cap of 23, our cap is 21, and with an operating expense budget of about $124,000. If your take home, right, what you wanted to pass through the bank, you wanted to be $100,000, it's saying that you would need to do that much business. I don't think that that's necessarily required if you're going to be an individual agent, but as you start building and you start leveraging and there are costs associated, absolutely it's going to get to a place where you're going to need to do a larger amount of business for sure. All right, so let's talk about some best practices. So gain clarity on your big life hopes and dreams. What are the things that you want to accomplish? What are the experiences you want to give? To Rachel's point, what she was talking about earlier today, and this is the whole thing from Keller Williams, right? It's to build careers worth having, businesses worth owning, lives worth living, experiences worth giving, and legacies worth leaving. Right? So that's the whole big thing. It used to be the 3, now it's the 5. So again, it's to have careers worth having, businesses worth owning, lives worth living, experiences worth leaving, or rather experiences worth giving, and legacies worth leaving. And so it's from that gaining clarity on that big life, what those hopes and dreams look like. Then we have to set a personal and business budget to fund that big life. We need to set up our business entity, whether it's an LLC, an S Corp, a C Corp, PA, whatever that looks like. Again, get with your CPA, get with a financial advisor. Again, I'm going to say that I do LLCs, right? But you can do whatever you want. To Yvette's point, so for the MREA chart of accounts, you can go on KW Connect and type in MREA budget. If you do work with entrepreneurial bookkeeping services, right? EBS, which is one of our vending partners here in the office, they actually set up QuickBooks to mirror the MREA chart of accounts. It is also in the back of the book that you can then go through and do it manually yourself if that's what you want to do. So then open up those additional bank accounts for taxes, expenses, and other savings. Again, I told you my bank probably doesn't like me because I have about 20 different bank accounts. because I run my personal life like a business, then I run my businesses like a business. So I have tax accounts for me personally, and then tax accounts for the businesses, right? I have profit accounts for me personally and profit accounts for my businesses. I have operating expense accounts for my personal life and for my businesses. So, it is somewhere between 15 and 20 total accounts that I have going on. Download and use the MREA chart of accounts. Again, I just told you can go to KW Connect to do that. Let me see if I can also do some digging, or if any of you find it before me, please share it on Cappers so that it can be a resource for other people and can just be dog-eared. Purchase, download tax accounting software. Again, this is QuickBooks. QuickBooks can link. Of course, you could use whatever you want, but QuickBooks can be helpful. Hire an accountant, a CPA, and or an attorney. Set dates to calculate and pay your estimated taxes if you do that quarterly or if you do that monthly. So if you notice about our market center, because the fact that we pay out profit and profit share, we actually zero out our books at the end of every month. So today is the last financial day of the month of May, which means that we're going to have 3 business days at the beginning of June, of which we close out all of our accounts and we give all of our numbers to Keller Williams International. That is the way that it's always run. And so that's also a really great thing to do for yourself, because if you're just going ahead and you're paying taxes on a monthly basis, then you never have to worry. And it doesn't get to a place where you get scared, or maybe you accidentally touch the taxes because you're a little short on money, and then you find yourself at a year later and you're short because you thought you were going to catch up later in the year and you didn't. So remember, it's not your money. It was never your money. And you might want to adopt either a monthly or quarterly estimated tax concept. So Bo said he is interested in hearing about running your personal finances like a business also. Do you still get the expense write-off power doing it that way, or is it more of a personal preference? So when I say that I run my personal life like a business, it's more of a mindset, right, than it is like an actual business entity. However, there are some things around that for sure. And I definitely think that it depends on what you do. So if you find yourself that you have hobbies, you might want to think about turning those hobbies into a business. And so the things that you're buying for those hobbies end up becoming a write-off, right? So if you think about Reedy and Red, or if you think about the fact that I like talking about this stuff, I'm going to need some equipment. I'm using this ring light as a part of the process. I'm going to be investing in a microphone for better quality. Like, all of those things could technically be called expenses for my business because they are necessary for me to run my business at a high level. So it's like, what are the certain things that you're doing? Well, if I don't know about you, but during COVID, we established that using the internet is not a luxury. Using the internet is a utility and it's a requirement. And so it's from that perspective that is, I need the internet in order for me to do my job. So that internet, depending on what percentage of the internet I'm using for my business, or in my case, businesses, plural, then there's a portion of that that can be written off for all of them. So there are some things that are here, but definitely just running it from the idea that as money comes in and you're allocating a budget, right, an operating expense, that, I said it the other day in Reading Red, budgets are a buzzkill and you need one, because it allows you to be investing in future you and not getting caught up in today you, right? So set dates we already talked about, and then prepare for your future, including insurance, including savings and investments, right? There are some really great things. You hear me talk about this. If you can learn to at least save 10% of your income, you will be wildly successful, right? If your intention is to retire in 40 plus years. If you can do more than that, then fantastic. For insurances, there are some things that you need to take into consideration about insurance for what we do. For me personally, if I was to have a stroke and I was no longer physically able to speak, I would probably lose a large portion of my job, right? If not lose my job in its entirety, because I coach and train and teach in a way that I'm using my voice to allow that to happen. I'm a communicator. So if I don't have the ability to communicate, then that's going to be really difficult, right? As much as I love Stephen Hawking, he didn't make his money from public speeches. Sorry. So we just have to be very clear about that. Daily success habits. The good news is you've already done the daily success habits for today. You've already done your script practice and you've already done your lead generation. Now, if you didn't get to your 10, right, your daily 10-4, then that's what the remainder of your day is, as well as take the rest of the day and this weekend to be thinking about future you. What does that look like, right? What does that number look like? What is the goals that need to be established, and why is it important to you? Why is it important to you, Leslie, to have 10 or 5 10-unit buildings? But why is it important to you to have the residential unit? Does it matter if you have a residential unit if you're only cash flowing $100 a month, or is it important to you to have a residential unit that's cash flowing X amount of money? To you, Leslie, is there a certain amount that if it's only yielding you $4,000 a month, was that the goal, or was there a different goal? And so always just gaining clarity, right? The bold law is clarity is power. And that's one of the big things that you can be focused on this week and this weekend on what are some things that I want to accomplish, and be really intentional, right? It's called a life by design, not by default. And so we want to be, of course, very intentional about that. All right, some ahas. I'm a little early, which is surprising for me. So I'm glad that we're here, but let's take some time. So how has your thinking changed? What ideas or mindsets were new for you today? What was meaningful for you today about this conversation on the financial basics of building a life by design? Go ahead and put that in the chat box for me. So Bo said the mindset of financial accountability. Yeah, it wasn't always my mindset, right? I mean, I was really dumb when it came to my finances. Or I thought that I was young enough that I had enough time to catch up. Well, you know, I speak to my father. My father's 62, 63, and he still thinks that he's young, right? So absolutely, we have some room to grow. And the challenge that I have is compound interest, right? Compound interest is one of the greatest things that can happen to you, or one of the worst things to happen to you, right? And so the longer that you're there, and you hear me talk about this from an investing or any of that, is that it's about time in the market versus timing the market, right? So for me, I'm a get rich slowly kind of guy, and I believe in compound interest, and I believe that it can work in my favor because I've definitely felt it when it's worked against me, right? Let's see, Bo said that he still has some growing up to do in that area as well. Yep, we all do, absolutely. Leslie, many times we try to ignore finances until it becomes an issue. I've been learning a lot from Rich Dad, Poor Dad, absolutely. I'm not super happy with Robert Kiyosaki's choice of freedom of speech lately. However, you know, again, it's his First Amendment, so he can do what he wants to do. However, I do absolutely agree. Rich Dad, Poor Dad is a great book. It has a lot of great teachings, as well as the Cash Flow Quadrant. If you've not read Cash Flow Quadrant, that's a really great book as well. Kelly said, love the idea of separate accounts and paying taxes monthly. Yeah. And as much as I say that to you, I don't pay my taxes monthly, but I do think it's a good idea. I think I should probably start. I think I'd have a lot less stress if that's what I was doing, for sure. Linda said, confirmation about importance of budgeting and all about business and personal finances needs structure and guidance. Yeah, I mean, listen, you have to have some form of accountability, right? And you've heard me talk about this before, that is, self-accountability is a mirage. We think it's there. We feel like we can see it, that if we walk up to it, we can touch it, and yet it's not. We cannot hold ourselves accountable because we are also the biggest slacker when it comes to being disciplinary on ourselves, right? Like, we're the good parent with ourselves. And so we absolutely have to have accountability come from someone else. And that accountability might not be the same person for all things, right? The person who holds me accountable in my fitness life is not the same person who holds me accountable in my business life. It's very clear. All you have to do is look at me and look at my businesses, right? Like, there's a big difference between the two. So the idea is that you have to make sure that you've got some people, or you have a community of individuals that you can have these conversations, that you can be coming back to, that you can be sharing these things. I have found that even if it's not a real person, right, like Wilson, if I have an Excel spreadsheet, or if I have Samsung Health on my phone, I find, and I was talking about this on Wealth Wednesday on Reedy and Read, that by tracking, right? And I'm really building that habit. I wasn't always tracking on a weekly basis, but by building a habit in my food intake, I'm now tracking on a daily or per meal, right? So I'm really doing a caloric intake log for myself. It's the same thing for my finances. I have to know where are the bills. I have to know what we spent money on, where there were opportunities for improvement, where there are opportunities for renegotiation. If you're looking for high profits in your business and you would hold your business accounts to a high level of scrutiny, why would we not do that for our personal finances? And so it absolutely can be a big thing. So what's an action step or action steps from this conversation that you intend to implement this week? So Bo's going to open up his real estate investment account. All right, love that. Kelly is to find a credit union in Florida. Okay. What's the importance to you about a credit union? I only ask because I was with a credit union from 1997 until 8 days ago. So I totally get it. I mean, I was a part of that office or a part of GTE credit union for a very long time. And so she says she likes it to be local, not a big bank. Yeah, I mean, I would probably speak to a couple other people that are on here. They might know one. I loved GTE when I was in Tampa. There were a lot of locations. GTE here only has 2 locations. If you're not worried about locations, then good for you. Then, I mean, GTE was a wonderful company, is a wonderful company. There are some others here. I have only banked my entire life. I've only banked with GTE, Federal Credit Union, and Chase, which is who I'm with now. And part of that is I have businesses that are starting to expand in other states. And I would like for them to be able to take checks, and for me to have independent contractors in different states, I need a larger bank. However, I will say, I love our local branch of Chase. I have a private banker, and anytime that I call Travis, he takes care of me the same way that someone at a credit union had taken care of me. So not swaying you one way or the other. I've done both, loved both. It's just about convenience for me. Let's see. Bo said he needs to finish, or he did finish, another template in Command Designs to add to his marketing material. He needs to invest in his materials to build a foundation of preparation. Okay. And then Kelly, of course, you're very, very welcome. Any last thoughts? Any last questions? We do have a couple more minutes. So if there is anything that you wanted to kind of expand on, of course, I can ramble for whatever. Linda said action is to review every dollar budgeting app and get more familiar with it. Do we have help, guidance within Keller Williams with finances, etc., through you or your mentor, or what other resources? You're always welcome to speak to me. You're always welcome to ask me questions. Again, I'm not a financial advisor, so I'm not going to advise you, right, in terms of guidance of what you should or shouldn't do. I'm going to tell you about myself. I'm going to tell you about the resources, the books, the things that I'm doing that can absolutely be helpful. You also have a market center administrator, right? So your MCA, your market center administrator, is the CFO and the COO of the market center. So they're dealing with budgets. They understand the Keller Williams profit and loss statements, right? They really understand those. That's the function that they serve primarily in the market center. So if you're looking from an investment perspective, there are a ton of people to speak to. If you're looking for structure, then you can do that. No. So in the downtown market center, your market center administrator is Stormy. So Stormy Sylvan just started on Monday. So it would be great for you to meet Stormy. Stormy has been in the Keller Williams system for a long time. I've worked with her in New Tampa, and she did some work down in Lakewood Ranch. She's been kind of a relief pitcher of sorts, and has kind of been a jack of all trades, and has a wealth of knowledge. And to answer questions for Kelly, I think we only have one more. We have one more class on Monday, and that focus is on market center specific. So we're going to be kind of talking about compliance, how to get paid, what to do with forms, where to find forms, all the fun logistical things. And Miss Kitty Cat Boston is going to be helping us. Bo is asking, is the next Ignite back in the office? It's a great question. I do not know the answer. Keller Williams International is supposed to be guiding us of what's supposed to happen in June to a certain extent. Of course, each franchise can do what they want. I think that we're still going to be honoring the no more than groups of 10 and maintaining a 6-foot difference. I'm not sure if that's going to be in the market center or not, but I'll definitely let you know. After Monday, we take 2 weeks off, right? And then we start again. So we will start again on the third week of June all over again, right? Leslie said, is this good for continuing education? So yes and no, all right? So Ignite, the old Ignite, which I can definitely get you the material for, is currently what we're using. There's a website that's called enhancedignite.com. It costs $45. It's a company that's separate from us. It's owned by a broker down in Naples. She's gone through the process of working with the Florida Real Estate Commission and the Department of Business and Professional Relations. And she has set up the original Ignite. So you can actually go through all 12 modules, you can read it online, and then the exam itself is going to be an open book exam, so you can go back through and do that. We have the textbooks here for the original Ignite if you'd like to use that to study. At this time, because we have launched Ignite 2.0 and this is a lab, right, so it's not finalized, we have to go through that same process all over again with FREC and with DVPR to ensure that this counts for continuing education. However, the answer is yes. Instead of having to worry about Florida statutes and all of those things, you can use Ignite as a form of continuing education, but it does require you to take the exam with an open book. And it's very easy. So don't worry too much about it, right? Not every question is this easy, but I'm just gonna give you an example. Shit, I'm recording. Shoot, I'm recording, so this is gonna probably go on YouTube. But one of the questions is, right, like what tools or what tool did you gain through Ignite? A, wrench, B, hammer, C, screwdriver, D, career growth initiative. Right, yeah. Leslie said D. Thank you, Leslie. If you said anything besides D, I would have a problem. So thank you for that. All right, folks, it is 11:40. Please take the rest of our time together, the next 20 minutes before your time block at noon. Go ahead and take the next 20 minutes, focus on your database, add some notes, add some people to Smart Plans, add any tasks that you need to do. Have a wonderful weekend, and I will see you, all of you, on Monday at 8:30. Yes, Yvette, you can call me about your listing. Let me look into that, Bo, on the Enhanced Ignite. I don't know why it's $95. So I will definitely look into that for you. All right. Thank you, folks. Have a wonderful weekend. I'll see you on Monday at 8:30.